Tackle today, Matt and Mark Justice from Tackle Trading, bringing you all the charts, the news, the analysis, so you can be informed in just a few minutes in your trading decisions today. Markets are being resilient, fighting against a higher dollar, rising yields. That's really the story. Earnings, McDonald's having some discouraging news. We'll talk about that, but we'll break it all down. But Matt, when I look at charts this morning, markets have a reason to sell. Like whenever you have rising yields, rising dollar, that's an excuse if you want. Markets are fighting very, very hard. It's like they're holding in, they're waiting for something positive to happen so they can finally break out. What do you think?
Yeah, I think that's kind of nail on the head there, Chucky, when you're looking at it from a pure technical perspective. And if all you do is look at the S&P 500 and that's it, you just see a high base and you're like, okay, why are we not breaking out? Why are we not breaking out? Well, you don't get to pick when it breaks out, but when you take into the context of what the dollar has been doing in this time frame, and the dollar going up as strong as it is from both an economic perspective. We've been dealing with economic beats over the last couple of weeks, but we're also having a legitimate rate conversation right now with yields going up and the dollar going up. And as the yields and the dollar are going up over the course of the last couple of weeks, the S&P 500 is up, gold's up, silver's up. And from a pattern perspective, you're simply looking at short-term consolidation. And so, yeah, I do think you have to be impressed that the S&P 500 is holding up as well as it is in the face of that dollar and yield rally. And so, yeah, I do see it that way, Mark, that there's some pent up demand that is waiting to get unleashed. But at the same time, those things can resolve themselves to the opposite side as well, Chucky. And so you certainly have ultimate concern for the dollar and the yields, but you're still tracking this as a high base waiting on a breakout.
Yeah, until that, where you're seeing weakness is in a lot of the other areas of the market, the like small caps, ARC, those type of instruments. Blue chips seem to be holding in a little bit better in the fight. But when you look at some of the other charts, that's where you're seeing, yeah, well, let me see. Let me maybe not at quite as quality, but you look at tech here, you wouldn't even know there's anything going on other than a little pause, would you?
No, tech's waiting on next week, quite frankly. And that may be what the market's waiting on. Next week's earnings are Apple, Google, Microsoft. It's the murderer's row of both economic and earnings reports next week. And so you certainly could see some hesitation in front of a very, very important week next week. But you're also having a major level of resistance you're tracking here on the cues right there at that 500 level. When you are looking at some of those rate sensitive areas of the market, they're dealing with pullbacks. You mentioned the small and the mid caps dealing with a little bit of a pullback. But when you're looking at this pullback, it's not exactly aggressive on the pullback. It's very technically well behaved, quite frankly. You got one big red candle on that extremely sensitive day on Friday, on Monday to the rates. And then you've had two slowing momentum candles that certainly is more of a drift down than any power move to the downside. Now, on the ARC, we don't necessarily look at ARC all the time, but I wouldn't describe ARC as massively volatile here as either. And so, yeah, you are dealing with a little bit of volatility this week, specifically in rate sensitive areas of the market. But even with those pullbacks in IWM, even with that little bit of hesitation on ARC, even with the multiple time frame resistance on the Qs and the high base on the spiders, when you're looking at the indexes out there right now, regardless of the index you say, Mark, regardless of ARC coming down a little bit to start this week, regardless of IWM's retracement, regardless of the consolidation on the Qs and the spiders, I see that as extremely positive in the face of what we are seeing on the United States dollar, which this is a pure V-shaped recovery at this point, and it's on a march right back up into that massively important overhead resistance right around the 106 level, which has been proven very stubborn for a very long time as well. And so I do think you got to be impressed with where the market is and where the market is holding up in the face of this dollar rally. And if the market continues to hold up into the face of this dollar rally, I'm not going to see that as a negative for the market.
Yeah, no, I mean, you're getting in overbought conditions on the dollar that you have not seen in a little while, right? Things can stay overbought longer than you would expect, but It's just going to
Yeah,
take one little thing.
Ducky, we D 99 on RSI here. Like
Yeah,
when talk about relative strength, it does not get, and that's the thing. That's why I keep saying how impressed I am with the market holding up, because the market shouldn't be holding up in the face of a dollar RSI going to 99.
no, it should not. It should not. Getting on economic reports, the dollar's move has happened in a little bit of a vacuum of economic data. We have had a very extreme light 2 weeks, the last 2 weeks. You had a retail sales, but you've really not had a lot of economic data. Now that's going to change, especially next week. Next week is going to be a really big economic week, but it's been able to run in the face of basically a lack of economic data. That's starting to change tomorrow. Picks up tomorrow. Manufacturing services PMI, existing home sales came out today. Nothing to see there, inline expectations. But we'll see once you get back to the economic data. I have a feeling that the dollar probably breaks its trend, or at least takes a break. But we'll find out. Well, we'll find out shortly. Matt, in the midst of the macro conversations, earnings reports, plus news outside of earnings from McDonald's. What do you got for us?
Yeah, we got McDonald's, Texas Instruments, and Coca-Cola in the news here today, and it's a fairly big earnings day. But Texas Instruments and Coca-Cola were the two major reports here today. McDonald's in the news, unfortunately, because they had an E. coli breakout at one of their stores. And apparently the quarter pounder was impacted here. It resulted in 10 hospitalizations. It resulted in one death. This is never a good thing for a restaurant company when they deal with these types of health outbreaks. And so we'll take a look at McDonald's chart. They did gap down, trying to recover a little bit. Texas Instruments was in the news as they did report earnings here. Texas came out with earnings with a slight beat, a little bit of a mixed report coming out of Texas Instruments. They beat EPS by 6%. Revenue was a beat, but it was down 8% year over year. And they also decreased revenue guidance, in my estimation, right about 4% from the midpoint. And so more of a range situation, but we do have a mixed report coming out of Texas Instruments. However, they are bucking that mixed report and up a little bit on the day. Coca-Cola reported earnings here today as well, and they were one of the major reports here today. They did beat EPS by 4%. Revenue did come in as a beat, although it was down less than 1% year over year. On the guidance situation, they reaffirmed forward-looking guidance for all of 2024. So a walk in the park type of a report for Coca-Cola here today. When you're looking at these from a technical perspective, McDonald's gapped down into a known level of support right there at 290, and now it's trying to fight back up against that 300 level. You're certainly going to want to see that volatility decline, and you're certainly going to want to wait and see that earnings report coming out next week as well. A little bit of a gap down. Price was really extended coming into that news here today. The gap down obviously broke some support levels, but more than anything, you got earnings coming up really close on McDonald's. When you're looking at those two companies that did report earnings here today, let's take a peek at Coca-Cola, who also gapped down just a little bit. When you are looking at Coca-Cola here, you see that as a short-term downtrend against the backdrop of a longer-term uptrend. And oftentimes when you do see those short-term downtrends against the backdrop of an longer-term uptrend, you look at that on a weekly chart to kind of smooth out that volatility. You see that bullish retracement on that weekly chart. It does have support right around 67, but obviously you would want to see some degree of reversal there against the short-term downtrend. And then on the last story of the day, Texas Instruments here, TXN just had a little bit of a mixed report here, as they obviously lower guidance a little bit. They beat on the EPS side of the equation. Revenue was mixed. Gap situation here, gaps up into the middle of a range, very choppy between 190 and 210. You're currently at 200. You don't have an edge on Texas Instruments. Didn't really impact anything else out there. It's kind of one of its individual stocks, quite frankly, but nothing really to see here from a technical perspective either.
Texas Instruments has the least correlation to semiconductor stocks.
It truly does.
It's IBM of the semiconductor stocks. That rising dollar chart impacting gold a little bit today. It's amazing. You talk about the resiliency of the market, the resiliency of gold in the face of that dollar chart is one for the ages, quite frankly. Not a surprise that you're going to have a candle like this where you're like, all right, let's take a little break, but it hasn't changed anything in the pattern, has it?
No, it really hasn't. Just a little bit of an overextended candle here, and really what I see here, Mark, is more than anything, the commodities have been moving in the face of the dollar, and that's obviously a positive thing. But you take a look at silver here. Obviously, both silver and gold are kind of rocking on the same gasoline right now. And you look at silver here, and yeah, the dollar coming down here today. You can certainly describe the commodity move here today very similar to what the dollar is doing. Dollar big up, commodities down. That's another day that ends in Y. However, you also have a major level of resistance on silver right around $35 as well. And so I kind of feel like the overhead resistance is playing a role right now against the overextended type situation. And you certainly would like to see some development of patterns right around that 35 level as well. For people that miss the on the SLV, the actual ETF instead of the actual commodity itself. For those of you that missed the 29.5 breakout or the 30 breakout, this is where you would like to see some secondary development, quite frankly. You look at that on a weekly chart, you see that chop all the way over here on SLV. But when you come over, and that chop is range bound between like 32 and really kind of 34 when you're looking at SLV. But when you look at the actual futures chart, you see that 35 on the futures chart as a major level of resistance. And so you certainly would expect resistance to play a role here. And so I think you could easily describe silver and a little bit of gold's price movement today, certainly against the dollar. That would be accurate, but also you're a little bit overextended coming into some major resistance levels on silver.
Yeah, absolutely. Listen, we're going to have the continued conversations on all of these in our Traders Lounge today, breaking down not just the stocks that Matt talked about, but deeper earnings analysis on many more companies. It's a great place to spend an hour. Come join us. Sign up for that 15-day free trial at tackletrading.com.